To get defensive, right? Dryden Pence is with us, Chief Investment Officer of Pence Wealth Management. Dryden, always love having you on to get your big picture outlook here as people are trying to reposition their portfolios. I know you're being a little defensive here. What are your thoughts about the volatility and how to position our portfolio here?
Well, I think one of the things that's important is to recognize volatility is going to continue for a period of time. And when we talk about positioning in this market, some people have sold out, they went to cash, they got frightened and stuff. But now here's the question of how do you get in? And the question becomes, how do we move back into the market, but do so at a time that we can withstand some of the continued volatility? No one's going to ring a bell and say it's all clear. So you're going to continue, we think you're going to continue to see these days of increased volatility around this, so that positions that people take really need to be ones that have income streams, or companies that have income streams that last longer than the virus. So in terms of taking a look at a company that might be good, one of the things we like is Northrop Grumman, which in this case, you have a defensive company. If you're going to be invested, you need to be invested not necessarily for the things that are going to be most volatile, but the things that are going to reposition you good for a good situation long term. This recovery is probably going to take place in stages.
So when we look at a name like Northrop Grumman, we talk about some of these aerospace and defense type stocks. I think of Raytheon and Lockheed Martin and General Dynamics and Boeing to a certain extent. But Northrop Grumman seems to be your favorite of the bunch, right? So, and I love these great companies. Why Northrop Grumman? What is it about the company that you like?
Well, one of the things that it has is certainly being one of the largest defense contractors. Its income stream is not affected by the virus or what's going on. These are long-term contracts that last a long time. But you see in the NDAA, the National Defense Authorization, they've already approved money for moving forward with cyber and space and avionics and all of these things. So you have a very long-term income stream for this company. It's been beaten down with the market like everything else, but you're in a position where its income streams are pretty well secure. So this is an opportunity. It is a defensive acquisition in a market that's been beaten down.
Tell me a little bit about some of the payment names we're showing here. MasterCard, I know you're looking at MasterCard and Visa. People are still, even from home, doing business. They're shopping, they're using, and as the coronavirus comes down and people get back out there, they're going to be using these payment names, right?
Exactly. And I think, again, what we see happening probably over the next, we're going to hit peak virus sometime here in the next several weeks. And then things, if you follow the China and the Korea pattern, things are going to start getting better. You're going to see, we think that you're going to see various states get back to normal at a different speed. So it's going to be regional. New York has a really tough period of time, but then other states are more regionalized. And the human behavior of buying things requires payment systems. Whether we're cocooning at home and just buying things, we're using that, or as we begin to expand. So these are companies that, again, have been beaten down, but now we are able to take a look at, they're in a position where if you're going to buy something online, and behavior is changing, more and more people are doing that, less cash, more online. Then they're going to be using these payment systems.
Less cash. You're so right. You're so right. Less cash. And even now, people are worried that cash carries the virus. I mean, nobody was carrying cash beforehand. It'll be interesting if people continue to just use, the payment space the way you're talking about. Last but not least, good old Amazon. Give me a thought on Amazon.
Well, Amazon is probably the big long-term winner over what has happened. Obviously, if you weren't shopping online before this happened, you are now. And so you have this, we're speeding up the period of time of the absorption of online shopping. Amazon certainly benefits that to the most. They've been able to have these massive logistics systems that have behaved reasonably well during this period of time. So someone who never did shop with Amazon before probably has, and they've had a good experience and they like it. So Online retail was about 10% of our retail going into this, and now we think it's going to exponentially speed up. So you're going to see a big jump during this and after this, and Amazon's going to be the chief beneficiary of a change in human behavior. So we like it. Mm-hmm.
Tell me about your emotional thought, because we're not supposed to invest with emotion, right? We're supposed to use our brains and be very strategic. But emotionally, are you feeling very worried, anxiety, or patient for the longer term? How would you describe your state here as an investor?
Sure. The big thing for me is the calendar. The virus is the virus is the virus. It operates at its own speed. We're not going to, it's about 14 to 16 days to get well. We're not going to speed it up or slow it down. So the big thing for me as an investor is to think about how quickly are people going to get well. The most important number isn't how many people get sick or anything like that. It's how rapidly people who are sick get well. And if you think that this is kind of a rolling 14, 16-day period, then as an investor, I can look at, okay, we've had this big shock to the economy. Consumerism has stopped for a little while, at least in several sectors. But we're going to get back to normal at a fairly rapid pace, probably more rapid than most people think. And human beings do what human beings do. So rather than be all emotional about what's going on, we just kind of map out on the calendar, here's when we think things get better, and that's going to help drive the market reaction. It's going to drive the consumer reaction. Yeah. And so I think that takes a lot of emotion out of it.